Okay, good morning, everybody, and welcome to the Daily Energy Markets podcast. It is May 16th. We are halfway through the second quarter, and there is no wind in the sails of this oil market once again after its its recent decline from the 80s back down to the 70s, where it was before OPEC's or the non-OPEC or the OPEC voluntary cut, if you like, which gave it some wind to push it back towards 80, but it's dropped off again. We're trading this morning in and around $75 on Brent. Let's go to Mike McGlone in New York to get obviously senior analyst with energy or with energy with Bloomberg Intelligence. There's no energy intelligence here this morning except for Rafiq. There's a few intelligence, and then of course there's Gulf Intelligence, so enough to be confused. But Mike, should we be confused by the growing narrative around the U.S. Sovereign debt ceiling or the lack of agreement around that?
Well, I like the way you phrase that, Sean. Confused, absolutely, but don't dispute the repercussions for the markets. And copper showing you that copper was up 12% on the year. Last week it broke down, and now it's down 2% on the year. Crude oil is continuing the bear market. We're seeing the U.S. stock market maybe just starting to roll over early days. And to me, the whole sense of deflation is just resting on that cliff's edge of the U.S. stock market going down. I think it will follow copper, and there's been close correlations for a while, and we need to admit the commodities are in a bear market. The Bloomberg Commodity Index is down 24% on the year. The Fed is still tightening, and we have this debt impasse. So I think the key thing to make this debt impasse go away is to make these two great parties agree is what happened in 2011. You get the stock market to go down when they wake up in the morning, they see in the Washington Post or the New York Times that the U.S. stock market's down 10% because of the potential for the U.S. to delay their payments. I hate to use that word default. I think it's an oxymoron, but to me, that's what's going to make it happen. So I see this as I don't want to be considered McGloom, just McFacts. This is a bear market potentially rolling over, and I'd like to ask ourselves, you saw that data out of China. There's a trend, a disappointing. We see the data out of the U.S. to fill the SPR. That's going to come, but 3 million barrels is nothing when you release 220 million barrels. I just see this as a pretty significant bear market that's just getting started. And the key question I like to ask myself is what stops it? And I don't see that at the moment. And the only thing I see a bull market in is U.S. Treasury bonds and gold.
Let's welcome Rafiq Latta, senior correspondent, Energy Intelligence, based out of Cyprus. Rafiq, OPEC to meet in a few weeks' time. They obviously took the preemptive action last month to cut further, at least some individual countries did. How does OPEC navigate this going forward?
Yeah, well, that was an explanation from Mike. I would say that I'm a bit surprised that we have pretty much all the buzz I see as an explanation for oil price weakness is directed towards interest rates and trajectory of the global economy. And there's not enough, I think, about this two-tier market that's opened up as a result of sanctions. We estimate up to 6.7 million barrels a day of sanctioned cheap crude is going around, and that's got to weigh on prices, bringing down the whole complex, and that's the reason, and that's what's driving, I think, OPEC behavior. I think the Saudis have taken the strategic decision, which is like, no way is our economy going to suffer because of your Russia policy. Even if demand was in a much healthier place than it was, we still could be seeing some price weakness as a result of.
But we've kind of seen this rodeo before, Rafiq, in the sense of the OPEC Plus, as we call it now. But ultimately, that attempt to stop the rock falling through water, and you cut and you cut and you cut. At some point, the bearish economic outlook just trumps everything, and cutting becomes a sort of a losing wicket rather than a gaining one.
I think they're yet to see it. I'm not sure they're convinced. I understand that the OPEC Secretary General is in China this morning, and he's looking at this. And I think for them, China is the key issue. And I think what comes out of that visit could well determine how they behave on June the 4th. but I'm not entirely sure they're convinced of it as yet. But they're certainly beginning to wake up to the potential of that happening. Yeah.
Osama Rizvi, energy and economic analyst at Primary Vision Network, based out of Pakistan. Osama, it does appear that Pakistan is finally coming around to this potential of discounted Russian crude. Is that looking more and more likely now, and will it be a relief for Pakistan?
Yes, so we've spoken about it a few times recently as well, but some recent details have come to have surfaced, but there's still a lot of mystery around the details of this deal. So one of the things is that the Russian grade yields about 45% furnace oil versus what we currently use, the Arab Lights crude oil, which yields about 50% of diesel. So we need our power generation, our transport sector, and all of that need more diesel than the furnace oil. So people have started to debate, especially the economists and technical people here, that whether this is even worth it or not. Plus, it has about 3 times the cost what we were paying for the crude coming from Middle East. We will be paying for Russia. That amounts to about $15 per barrel. And once again, Pakistan cannot afford additional cost in the form of anything else. That plus the most important issue, the most significant issue is that we don't have the currency in which the Russia is asking us to pay it for. That is ruble or yuan. So Pakistan's foreign exchange reserves are now near $4.5 billion. So we don't even have dollars, let alone yuan or ruble. We never built reserves for those currencies. So this currency issue is a major hindrance right now in the completion of the deal. It's already 16th of May. We know that there was a lot of political unrest in the country recently. In the previous week, we had an internet blackout for about a week, and just a few kilometers from here, from this office and my home, there were protests and whatnot. So amongst this madness and with this currency issue still at hand, my doubts still remain regarding the materialization of this deal.
Mike, we had Janet Yellen writing again to the Congress yesterday, a letter to the principals, particularly to the Speaker, Kevin McCarthy, sort of indicating the outlook for when approximately the U.S. would be unable to meet the government's obligations, as she framed it. Early June was the reference of time frame, and yet the markets and everybody is kind of reacting in a sense as they have in the past. All of the drama, they'll get this sorted. Is that the right posture? Does it feel any different this time, or not? What's your read on this situation?
It's a lot. We all know it's a lot of political posturing. The U.S. will pay its bills. It just print more money. It's not that complicated. It is debits and credits. It's not, but the posturing is just getting kind of political. We know that's the case. I think what we're in a stage right now, there's a lot of the markets have dropped, indicating a full-on recession in the U.S. Our Bloomberg economics team, Anna Wong, expects that to start in July. And I think the key thing is the issue is that we're all pointing that the U.S. stock market is still hanging in there. Now, that was actually not just my take. That was a take from the Federal Reserve. Just 2 weeks ago, Dave Alteg, he's the Federal Reserve governor from Atlanta Fed. I got to meet with him in Miami. And I spoke to him for a good 10 minutes. And I told him, you know, Dave, the producer price index is dropping at the fastest pace in history. Now, to be able to make that statement is kind of shocking. I said, is the Fed aware of that? And my view is the Fed are they should they be easing? Are they too aggressive? And he said, there's people who agree with you there. So I think what we see now is kind of a lose-lose for most risk assets. Crude oil's a risk asset, copper's a risk asset, and the stock market's a risk asset. If we get this, at some point, we're going to get the stock market roll over into a recession. Maybe it gets accelerated because of the debt issue. That will be solved, but it might take the stock market going down to solve it. It's, to me, a lose-lose for copper, crude, stock market, and how they work it out, that's the problem. I don't know when and where and how, but I don't see it coming out as a good scenario at the moment. Meaning to wake up one morning and say, "Oh, we resolved it. We're going to just raise the debt ceiling. We're good." That to me is unlikely versus the market going down and making them do it.
Well, in her letter yesterday, Mike, Secretary Yellen used this phrase that the actual date Treasury exhausts extraordinary measures could be a number of days or weeks later than the sort of early June sort of D-Day date. So there's clearly a window of time after that where the Treasury can utilize extraordinary measures. What may they look like, and should we have concerns around them? Yeah, default may not happen, but we still might go through the rapids of extraordinary measures.
Right.
And in those rapids, who's likely to fall off the boat?
Well, we see what happens in the past. Government shutdowns, which gets political. As far as falling off the boat, you tilt towards that government shutdown. I think it's more significant is the macro, what it's doing for sentiment, and this potential depression that's kicking in with consumer sentiment, where they're just going to cut back spending, buy T-bills, and say thank you, goodbye, and gold. So as far as specifically who, but overall, I look at from a macro standpoint, it's all bad for risk assets.
Rafiq, the actual debate here, ultimately demand weakness, the outlook of demand weakness, China's demand not quite getting back to bionic levels as was maybe forecast, but that was always forecast to be the second half of the year. We still have this weird dichotomy where OPEC plus individual countries have made these voluntary cuts, and yet OPEC, the organization, the institution that advises its members and does the research, is still holding on to its forecasts of some 2 million barrels a day of demand growth this year. And similarly, IEA. How does that circle get squared?
It's 2.3.
2.3.
I mean, it's always been the case when there's a big swing in demand or even supply. Both of them, IEA, but especially OPEC, tend to lag, especially when it's bad news. That's just a given. But it's been at 2.3 for some time now, and you look, even the quarterly changes are minimal. Normally, when there's some bad news, you quite often get the changes within the quarter, but they keep the same annual kind of outlook. But we're not really even seeing that. So are we actually seeing then, we're not seeing OPEC institution adjust its growth forecast, 2.3 million barrels a day demand, and OPEC and IEA has the bulk of that stacked in the second half of the year, even in the fourth quarter, and yet we're cutting as we go into that. But are we indeed cutting? Do you see those barrels? Is Energy Intelligence Research indicating that these are actually the 1+ million barrels of cut that was to come this month? Are they coming? Are they here? So far, you look at the tanker trackers, and they're down quite a bit, quite substantially. We even had April a slight decrease. I know some had put it up, but there's been a substantial shift downwards. So they're aware of it. They're worried.
Osama, looking at developments in Pakistan, most recently on the political front, we have the detaining of Imran Khan, the former prime minister. Is that a significant event? Is that a destabilizing event, or just sort of political noise and business as usual with Pakistani politics? Every prime minister has to take their time in jail.
Yeah, no, definitely. I would call it as, it was a critical juncture in our country's history. It is true that this has happened before in the bigger picture of things. Almost every leader has went to jail. As Andrew Tate said, all good guys go to jail. So now the good guy as well. But the point is, this is happening at a time when Pakistan is literally going through the most difficult year in terms of its economy since its inception. I've said this before as well. So this unfortunate coincidence of political uncertainty and political madness and whatnot combined with the issues on the economic front, that has created an unprecedented, what Adam Tooze has categorized as a polycrisis in the country. So we had mega floods recently. That has created a huge food shortage and an increase in food prices. And Pakistan is the second most vulnerable country to rising food prices in the world. We spend about, an average household spends about 55% of its income on basic food items, right? So that has caused a lot of social unrest. And that has also caused an increase in crime. So you have this side on the societal side, and then you have this political uncertainty, which has, amongst many other things, which has further delayed the completion of IMF's 9th review, which is due from November 2022. So unless we have that bailout of $1.1 billion or something, we are not looking, Pakistan cannot even, hope for any sort of stability. But then you have political unrest. It'll begin again after 23rd or 22nd, when the bail period will end and the cases will reopen. So I'm expecting a lot of turbulence in this region, of course, and then this spills over to India and Afghanistan, and the whole region, comes under the grip of it. So that's a little bit concerning moving forward.
Mike, let's stick with the political narrative. We have obviously the US and presidential politics sort of gaining a little bit of momentum as other Republican candidates start to jump, sort of at least signal intention to jump in the race. Most importantly, the big heavyweights of DeSantis in Florida and the former Vice President Mike Pence announced yesterday, or a super PAC announced the formation to support Pence. Is that a big enough sort of issue to track that these different horses are joined? Obviously, the Democratic candidate is pretty, obviously defined as the president, but this now competitive flavor in the Republican area, will that have any impact, A, on the debt ceiling or other issues that could be influenced by the noise in the race?
So I appreciate the question, Sean, because it's so obvious right now in this country. The last thing everybody wants is these two old Republican, the one old Republican, the old Democrat who ran last time to run again. It's going to be so depressing if we get Trump versus Biden. So everybody's like, go away. So if you just look at the simple facts of cycles in economics and us tilting towards a recession, the next president is very likely to be a young Republican, someone who's not old and someone who's of the opposite party of the current incumbent. That's just a classic cycle. The question is, who's that person going to be? Obviously, you mentioned DeSantis. He's a front runner at the moment. We'll see. But that's the key thing to think about as we enter this recession, is we're also going to get the recession or the depression from people looking at, please, we don't want to see you two again running. Give us someone new and younger. That's the sentiment I'm getting here.
Rafiq, while we're on it, let's get the latest from Turkey. Erdogan going into the runoffs looking I think stronger than I expected. I mean, generally 5 percentage points ahead. What's the outlook for the second round, you think, and the consequence?
I mean, it looks like a slam dunk, which is incredible. 50,000 people died as a result of construction policies, which he is ultimately responsible for. And he gets re-elected. I think it's a big indictment of the opposition. There's going to be a big shift there. I mean, Kılıçdaroğlu, the opposition candidate, he's basically proven to be a serial loser. They were better candidates. The grandees of the opposition party chose not to go for them. So I think there's going to be a big shift there. I think there's a lot of energy implications. This sort of pro-Russia, independent, nationalist policy that we've seen from Erdogan. I think that's just going to intensify. And the potential tilt back towards a more pro-Western view is not going to happen. I mean, just to be clear, so I think under Kılıçdaroğlu president, we might have seen a tone down in all the buying of Russian crude and products that we've seen. This talk of a Turkish energy hub, which would essentially be taking Russian gas and trying to launder it. I think that plan's still alive. Yeah,
he did have a lot of support from the region as a whole. I think Saudi Arabia deposited $5 billion in the Turkish central bank in the last few months to stop the slide in the currency. Regionally, it seems this would be a welcome outcome, if not globally.
yeah, there are lots of people who would say that. I so I'm not to be one of them, but
yeah. Well, clearly it's a surprise, and ultimately the one thing you would say, I think, in this moment of fairness, that may not be something one could say about, in Russia or other places where elections take place, that in Turkey this is a real election. People do vote, and they're generally regarded as free and fair, and so the result reflects the electorate. Would that be a fair assessment?
There's clearly been a lot of shenanigans. There's clearly been far less airtime given to, I think it's by a factor of 5, 6, maybe even 10, given to the opposition. But at the end of the day, a couple of years ago, when you did not have this earthquake effect, the opposition mayor in Istanbul, like a key battle, he won. It might have taken a revote, but he won. So I mean, I would say it's not been critical.
Clearly that's a very relevant point, that the access to media and to promoting the message of the opposition has been a lot more constrained than the ruling party, which controls most of the media. And so that is an idea that isn't exactly a fair run into the election. But at the ballot box, I think they're generally regarded as free in the sense of access for everybody.
Yeah, I don't think I don't think it's been a critical factor. And as you mentioned, the people in the earthquake zones have voted overwhelmingly for Erdogan because they believe that he's made a credible promise to accelerate rebuilding, and he'll deliver on it. And in the past, build is something Turkey does. You look at the construction projects that have gone in under Erdogan, and it's impressive. He gets things done on time. There might be a bit of smoke and mirrors, like this new gas project that's come on stream it's come on stream, but nevertheless, it's been like a very impressively managed project. So, those guys wanted to vote for Erdogan, and they've had less access to the voting, to ballot boxes, so yeah.
Let's go to the survey question today, which sort of is tackling again this outlook for the default. What is the likelihood? Generally, there's a sentiment outlook rather than a percentage one to choose from. No way, unlikely, maybe, probably. In some ways, it might be drifting from 1 to 4 as the months and weeks as we count down the days. But where do you think it sits at the moment from your perspective? Which one of these would you put the sort of current window in? And given all the factors, rather than, I suppose, how you might come to that judgment. Osama, we have the outlook, and we talked earlier about the idea that Pakistan may finally come to the opportunity of discounted Russian oil. But of course, that is late to the party, as most of many of your Asian neighbors are doing so, and particularly India. India is enjoying a fairly robust economic performance compared to the rest of the world. But I did note in the last week that Narendra Modi lost an election in a very important state in southern India. What's your reading on that? Less than a year out from the general election, how do you read the tea leaves on that?
So India is a very curious case. On a bigger picture level, India has been performing really well. The economy just overtook that of the UK as the 5th largest economy in the world. Apple opened a flagship store in the country, right? Tim went there and everything. But from a relative point of view, India has been facing some issues, internal issues as well. The banking sector, the lending sector, the companies with they have some lending issues. Then there are also there are also concerns or reservations with how Modi has handled international relations in terms of its immediate neighbors. So there is, like every country has, so there are some hardliners, then there are some, forward-looking people. So they have a tussle going on. I know that he lost an election, but I still think he is going to win the general elections because under his tenure, a lot of improvement, I must say, and I must acknowledge, has happened. So this isn't symptomatic of a greater change until unless something else happens.
I mean, on that point, just to sort of pick up at it a little bit, I know you say in Pakistan, and it's a different worldview in a lot of ways, but ultimately, India has also, and under Modi increasingly, and particularly on this issue of discounted Russian oil, signaled a willingness to separate or create distance between their natural Western democracy allies and their alignment with Russia, and even to a certain extent with China. Where do you think that goes? And is that a notable departure from the traditional posture that one should pay attention to?
I tend to believe, especially after post-COVID and Russia-Ukrainian war, overall, the orientation of the world has moved from ideological to a realistic point of view. And I tend to think nationalism or national interest, if you may, has taken the driving seat at the moment. And we have seen this in the form of rising food imports from every country, even though there's a food crisis happening on the global level. So similarly, the same has been reproduced in India. India enjoys a sovereign space because, as I said, of its economic size, because it's about to be the most populous country in the world. Such factors contribute to India's freedom in enjoying in saving about $80 billion so far in its oil imports from Russia. However, that said, I still believe its tilt or inclination or its role in being part of the Quad agreement or its alliance with the US in terms of its as a counterweight to China, that will still go on. I believe it's just a phase. It's part of something bigger. So that bigger part or the larger picture is still the same.
Right. Mike, just to wrap up again, coming back to the outlook for rates, the general sort of somber element on the economic outlook seems to be that the US Fed's rapid acceleration in interest rates over the last 12 months from essentially 0 to 500 basis points is finally weighing on the economy. Should we now expect that they are plateaued, they are done with this rate cycle, but inflation is still quite high and sticky?
Inflation, the measures they look at are personal consumption, expenditures, employment cost indices. They're sticky and they're high. The Fed fund futures have priced for a plateau, and they're looking for to drop by the end of this year to about 70 basis points from current levels, expecting the Fed cuts. That's the big dichotomy right now. The markets, the Fed says they're not going to cut. There's job bonding. Markets are looking for it. The key thing to make them cut is a continued trend in commodities towards deflation, a rollover in the stock market. And I think that's what's going to happen. So I was just publishing this morning. I'm looking at key levels in crude oil. If you just look at what was the average price in 2019, that's the price we should expect to go to. That was $57 in WTI. And natural gas has already done it. So my question I like to ask is, what stops this? The Fed has made it clear that they will keep raising rates if inflation goes up and markets keep going up. So that's, to me, is don't fight the Fed.
Don't fight the Fed. Last word with you, Rafiq. I wanted to get your thoughts on, there's been a lot of noise in the recent sort of COVID and the Ukraine war outcome of the energy crisis in Europe, that the East Med would become economically viable in which to deploy and explore its gas reserves and get it to market, LNG and so forth. Since we have seen the energy crisis not sort of materialize, and with the collapse or the serious drop in gas prices, does that take the East Med off the table again? What's the impact for the East Med with this sort of stabilization of gas prices?
Well, it's clearly negative, but nevertheless, there is serious momentum towards turning it into an exporting region. But there are also some headwinds. I mean, number one, it's the gas price, but also don't forget there's the trajectory of Egyptian production and demand, and that's the key thing. And I think we need to see. My view is there's some big drilling about to take place this year. And we need to see the results of this drilling before major export projects get sanctioned. It's clearly taken a lot to work out. It's clearly complex. You've got like 3 different countries, lots of jurisdictions, and yeah, that also accounts for some of the delays. But I think we need a bit longer. I don't really see some sort of massive breakthrough and FIDs taken for another year or so.
Yeah, I would agree with that. Well, there's the survey result. Unlikely, 60%. No way is 30%. So we'll post that on social media now. But you'd say that unlikely is a little concerning, because it does obviously have a certain amount of view that this is possible. It's on the cards. My sense is that yeah, definitely. I in the unlikely camp, and I would be to the no way if it wasn't for the yahoos in Congress. But I do think it's very likely that we will go through that period that Yellen mentions in her letter, that extraordinary measures period, which is could be quite a number of rapids through the month of June that will have negative outcomes, increase the U.S. borrowing, or maybe even a downgrade, an increase in U.S. borrowing costs and other measures. So one needs to anticipate that, even if we arrive eventually at the no way they'll ever default point. Thank you so much, Osama in Pakistan, Mike in Florida, and Rafiq in Cyprus. Great to have you all with us this morning. Oil, Brent trading a little change at $75 a barrel. We'll see where it goes from here. All the best. Thank you.
Thank you.